Ladies and gentlemen, welcome back to the channel. AMC stock has clawed back from the grips of defeat that we were seeing earlier in the day, with the stock down about 5%. Now the stock is only down about 1%. The markets have since rebounded quite a bit, but you're still down almost 0.5% on the S&P 500. Now, none of this matters until after hours, because once you get Netflix earnings, that's going to dictate how the trading day is going to go tomorrow. And we'll look at any economic data we have or any Fed speakers that might be coming tomorrow that could help offset potentially some fear or green in the markets. But tomorrow could be a big day for AMC stock, and that's what we're going to highlight here in this video with the mega bounce, guys. And I am not a financial advisor, so by no means do I have a crystal ball. Do I know what is going to be happening, or am I qualified to give you personalized financial advice? Nobody is allowed to do that when you are speaking to hundreds or thousands of people. That is no bueno. So long story short, if you are unaware of what you are doing, if you don't know how to trade or invest, if you don't know what kind of risk you are taking, contact a financial advisor so someone can help steer you in the right direction. But simply following trades or ideas you hear online or listening to the data alone is not a way to be successful. So do not do that. That is the preference I'm going to give you for this video, because what we're going to talk about is exciting, guys. I can't lie to you. We've seen it in the past with these mega bounces, and there can be a lot of opportunity there. So let's get into this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, first things first that I do want to get into here in this video is going to be what happened today. If you did not watch the last video, you did get a couple things happen today. So Fed Governor Lael Brainerd sees high rates ahead even with progress on inflation. This is like the number 2 to Fed Jerome Powell. She's the vice chair. She's like the vice president to the president. So for lack of better analogy, she is very important, and she is a voting member, so her vote, her words do matter for 2023. And she's along the same lines of the Fed, higher for longer. So that was key. You also did get initial jobless claims today, which came in better than expectations, but that is worse for the markets because it's showing the labor market is still very, very tight. And we went over this data earlier, so I don't want to stay on it too long. It did help cause this drop that we are seeing in the markets. At one point, you were down over 1% on the S&P. Now you're down 0.5%. So you have taken back some of those losses that you've seen in the beginning of trading. That is definitely a positive thing. AMC went from 5 to 6% down to now down about 1%. At some points, down less than that. So it's setting us up a little bit better for Netflix earnings, and Netflix earnings will be key for all of technology, and this is the first technology stock that we're going to get earnings for, right? And Mike Wilson, he's the top economist for 2022, and he works for Morgan Stanley. You've seen him before. I'm sure you'd recognize his face, you'd recognize his voice. The markets pay attention to what he says, but not this time around. He's basically saying over and over and over again to be careful of this earnings season, because expectations are way too high, and analyst expectations, their actual price targets, their EPS numbers, their margins have not come down. So you're heading into earnings where retail sales are bad. Right? Retail sales were very bad. Just everything has not been good for the consumer as of recently, as well as, you know, kind of retail spending along those lines. Well, you're heading into earnings for the same time period, and risk is not appropriately being priced into this market. Now, Netflix is set to report fourth quarter earnings after the bell. Here's what to expect. Netflix is scheduled to report fourth quarter earnings after the bell. The streaming service new ad-supported service will be in focus, and Netflix has been cracking down on password sharing. Wall Street expects EPS of 45 cents per share according to Renoviv, revenue of 7.85 billion, and expected global paid net subscribers addition of 4.57 million subscribers. I think the estimates are pretty high, especially for the subscriber numbers. So that makes me a little bit weary of just how Netflix has rallied since their last earnings and how high their expectations are. A lot of this is because Netflix did guide up last quarter, which is part and part why the stock did rise. So we'll see if all of that was talk or if the expectations, maybe Netflix adds like 10 million subscribers. That would be insanely positive for technology. You're going to have a big day tomorrow. It's going to help AMC also have a big day. Vice versa. If they add 1 million or they're in negative territory for whatever reason, that's going to be no bueno for the markets tomorrow. No bueno for AMC stock, guys. And like I was saying with Michael Wilson, he is saying the S&P could fall to 300 to 330 this earnings season. Not like Q2 or Q3 or Q4, he's saying this earnings season. You could see a 20% decline just because earnings are probably going to be so bad. And you're going to see all of those expectations that should have been reset already get massively reset to the downside. And that's just important to point out because when the top economist is saying that and, the VIX is under 20, you got to be paying attention to it. If you're bullish right now, you need earnings to pull through. That is the bottom line to all of this. And if earnings do pull through with Netflix, tomorrow could be a very exciting day for AMC stock. And it brings us to this mega bounce scenario. So essentially the premise of a mega bounce, they happen on Thursdays or on Fridays, and it's a 20% or greater rally on those days. And what it is, just to kind of make it make sense, it's where you have a lot of option activity, you have a lot of puts in the money, which if puts go out of the money because the stock is going up, that is buying pressure from market makers. If you have calls that are out of the money, or a lot of them I should say, and the stock does start to go up, well, that's buying pressure from the market makers. But why the timing is so important, why I'm saying Thursday and Friday, is because if you have this option expiration on Friday, that means by the end of the day Friday, the market makers will have to go out and purchase all of those shares for the puts that went out of the money and the calls that went into the money. There's no, hey, we got 2 weeks left to expiration, we don't have to hedge out all these contracts. No, you got 2 hours until expiration. We got to hedge out these contracts now. So you can see a lot of volume on these days, and you can see the price of the stock move up very, very aggressively. And we have seen this multiple times in the past on these large expirations. You've seen in the past where the beginning of the week would be terrible, and then Thursday and Friday, or sometimes just Thursday, or sometimes just Friday, is very, very positive, seemingly for no reason at all, not getting any news. It's because of the option activity, guys. So let's run through the numbers. You have 38,561 calls that are currently in the money, 488,000 calls that are out of the money. In the money puts it at 142,000, puts that are out of the money is at 184,000. So you have some seriously high numbers here. And when you look at AMC on a technical basis, especially after this rally back that we have seen for part of the day today, markets are giving up a little bit heading into the close, but nonetheless, it looks very good. Just look at it like this, without any other pretext from the options or anything else. I mean, you look like you're in a rally, and you have seen a little temporary peak, but you're finding support at this major level, at this level that has been important for months now. This is the same level that goes back to after the January rally of 2021, where you rallied, you fell, you came up, right, with a secondary rally, and then you found support at this level for multiple times, so many days you found support at this level, and then you went through the June rally. that is part and part why this level is so important. And if you take a look at where we're currently at, you are above that level. You are again finding support at that level. And even just like 4 or 5 days ago, this was resistance. Now it is solid support, and you're also coming pretty close to your downtrending level of resistance. We've also had this line drawn on the chart for a while now. Ever since after the June rally and the subsequent pullback, you have kind of seen resistance at this line every single time during all of these rallies, and now you're getting to a moment where it's very, very close. So if you break above this level, that's where you could see some real explosiveness, and the overall change of trend could happen from a long-standing downtrend to potentially a short to mid-term uptrend. And that could obviously lead into the MOAS, could lead into a major short squeeze. Obviously, you guys can infer what would happen after this, we do cross this line, but I'll tell you, it would be massively bullish. Now, it's not like we're overextended even after this rally heading into tomorrow, a potentially huge day for AMC. The RSI is at 55.59, so a little bit over neutral, but not close to being overbought at that 70 level. You're pretty much at a neutral level. The MACD is in bullish territory, but it's not above the neutral line still. So you're getting close to that, and you can imagine this neutral line is right about here, right? You're still not above those levels, whereas even like back here during this rally you've seen in August, you were above that neutral level with some very good volume, with some very bullish inflows. Right now, it's baby-like compared to what we've seen in the past, guys. So by no means has AMC just rallied too much, even though on a percentage basis, it's rallied quite a bit from the lows that we've seen. That would be, oh, gotta pull up the trend line. From the lows that we've seen around 377 until we to where we are now, you're up about 47%, almost 50%, and some change, guys. So things are looking bullish on a technical basis. Now, one danger that I will tell you is that the VIX is not appropriately pricing in the risks of this market. Statistically, in 2022, if you bought stocks when the VIX was at 20, you got crushed. If you bought stocks when the VIX was at 30, you did very well. So what this is basically monitoring the puts to calls on the S&P 500. When this goes down, there's less puts on the market, there's more calls on the market. When this goes up, there's more puts on the market and less calls on the market. So you should not see the VIX at 20 right now. And it was up 5% today alone, and now it's down 0.5%. So you've seen a massive change of positioning here today, and I just don't think that is warranted given we haven't even got into tech earnings. The markets have since just got rejected at a major level, guys. So it could signal there is more downside to come, or potentially a lot more downside to come, but it is not a definitive. Eventually that trend of the VIX will break. Now, if we take a look at the Ortex data for AMC, we could see the live short interest of free float is at 21.97% short interest. This is a high since June, right? It's not been over 22% since June. Last time it was, obviously, June of 2021 was very bullish, and that's where you got this whole short squeeze. And that wasn't even a huge short squeeze. That was like a baby short squeeze. Only like 6% of shorts actually covered their entire short positions, or I should say 6% of the short interest went down, or was actually covered on. So to put that into comparison, you're pretty comparable to those June levels on all aspects of this trade. The live short interest, as far as shares that are currently sold short, sits at 113 million. Cost to borrow average of 285.64%. Cost to borrow max of 328%. And cost to borrow minimum of 7.26%. Cost to borrow numbers live from interactive brokers of 300%. thousand, guys. So there is that. The last thing that I want to do in this video, we did cover a lot, is to take a look at where the open interest is on the actual strikes, because a mega bounce, you know, that comes into play when you get into large strikes that instantly have to be hedged for. And well, what do you know? At the $6 strike, you have 27,000 calls that are out of the money. At the $6 put, you have 19,000 that is currently held for open interest. At the 650, you're looking at about 13,000 on the call side. You're looking at about 3,300 on the put side. And at that $7 strike, 28,000 for calls that are out of the money and 14,000 for puts that are in the money. So you're looking at millions and millions of shares that would have to be hedged for if you started to get even a 10% rally to get us to $6. You're looking at millions of shares at that level. 2.7 million on the call side, about 2 million give or take on the put side. That's almost 5 million shares that would have to be hedged for instantly at the $6 strike, considering the volume today alone is at 28 million. If you see 5 million shares that have to be bought instantaneously, just imagine what that would do for the price of AMC, guys. So leave your comments, questions, thoughts, concerns, all of that good stuff down below in the comment section. What do you think tomorrow has in store? What do you think Netflix earnings also has in store for the markets, guys? Thank you for watching. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.